All right, time for us to do business. My name is Kweku Temen, and tonight we start with the insurance industry. The Ghana Insurance Association says warehouses of the Ghana National Food Buffer Stock are not insured. Checks by TV3 at the buffer stock have confirmed this. Currently, the 25% fire insurance coverage nationwide is for only private sector.
Following the fire outbreak at the Central Medical Stores, TV3 has begun asking why government will not insure its vital national assets to avoid shortages. TV3's investigations has revealed only vehicles of the national buffer stock, for instance, are insured. Other assets of the national buffer stock are not covered by insurance. With over 300 bags of grains stored away in 2014, any fire or allied peril could lead the country into a food insecurity in this dry season. Government recapitalized the defunct food distribution company in 2010 to the tune of 15 million cedis. This has become necessary as Ghana continues to record post-harvest losses annually. Post-harvest losses are estimated to range between 25 to 30% of total agricultural produce. The company inherited some warehouses with about 34,000 metric tons total capacity from the defunct food distribution company. With all these assets, the Ghana Insurance Association has confirmed no insurance policy has been written by NAFCO.
No warehouse for food has been insured, but just as the Central Medical Stores was not insured, it has not come up for us to look at the warehouses for our buffer stock.
Apart from a few of its cars, government is the worst insurer according to the association. Currently, only 25% of all properties in Ghana are insured, and government property is not part.
In Ghana, government owns the highest number of assets, and government is also the highest employer. So maybe say 60% of those assets are owned by government, and if 60%, then now we're talking about 20 to 25% of the assets in Ghana being insured.
Perhaps a quick look at ensuring the national food buffer stock by the Ministry of Agriculture could save Ghana a potential food insecurity.
So you should be staying with TV3 Investigates as we go out there to expose all those outlets that are not insured yet. Looking at other stories, Isaac Owusu Ansah Enterprise emerged the overall best distributor at the 2014 GASM Customer Appreciation Night held in the Western region. 60 other customers were appreciated for their performance. A report by Ebenezer Kwame Abaka.
The overall Best Distributor Award went to Isaac Owusu Ansah Company Limited, a distributor with a sales outlet in Kumasi. Isaac Owusu Ansah Company Limited sold about 58,455 tons of cement. Educ Company Limited, also from Kumasi, won the second best position. He sold 53,560 tons of cement. The third best position went to Jos Aja Enterprise of Takoradi. The company sold 52,480 tons of cement. Other award categories included the Most Improved Award, and that went to Agricov Enterprise at Takoradi, while the Brands Association Awards went to Nawusu Enterprise, also at Takoradi. GASM's Production and Maintenance Unit in Takoradi was awarded the Most Collaborative GASM Team Award. The chairman of Takoradi GASM Distributors Association, Andy Baini, appealed to management to inform them prior to price changes to avoid losses. The commercial director of GASM, Nana Philip Archer, promised GASM will continue to focus consistently on high product quality through an efficient and effective distribution system.
It is these customers who indeed have made us number one for almost 50 years, and we have always remained the best cement producer in this country. And this shared dream will continue to be prosecuted in a manner jealously to ensure that we will stay on top of the game and be number one in the country. We had a certain mission or a certain vision last year to come to a certain level of market share. By the end of the year 2014, I'm happy to know that we exceeded that target of the market share.
The overall best distributor, Isaac Osuansa, urged GASM to improve on its operations to remain its market leader position.
Still going back to insurance, Hollard Insurance, a South African insurance firm, has extended its reach into West Africa. Now, this follows the acquisition of majority stake in Met Insurance in Ghana. The move is to enable the company adapt to dynamics and complexities of the global market and emerging risks.
Insurance, previously Madison Insurance, commenced business in 1994 as a composite insurer, underwriting both short and long-term business. From 2006, the company maintained a strong presence in the corporate segment of the market. Met Insurance is ranked among top 5 insurers in Ghana. Together with Hollard, Met Insurance has pioneered a successful short-term bancassurance offering in the Ghanaian market. With this new partnership, Met Insurance is poised to explore strategic partnerships in pursuing its growth agenda.
The levels of insurance penetration in Ghana are still low, but one has to also appreciate that the levels of education in Ghana are still are very high. So that's what presents an opportunity for Hollard and Met to take advantage of growing the market. So it isn't really about stealing market share, it's really about having innovative products that will grow the market.
We don't want to just be a local company, we want to be part of a global company, a company that will bring in fresh ideas, new product knowledge, get a very strong balance sheet, and a company that will have the modern ICT, which will be able to deliver services to the Ghanaian insurance public to the world, the international best standards.
Deputy Commissioner of Insurance Simon Nero Davo expressed satisfaction about the move. He was optimistic the new majority shareholders, Hollard Insurance, will further position the company for growth in the industry. Met Insurance also adored its new corporate head office in Accra.
The Dubai Chamber of Commerce and Industry has inaugurated a new office here in Accra. The office will promote Dubai as an international business hub and strengthen economic and trade ties with Ghana and the rest of the continent.
The Dubai Chamber of Commerce and Industry was established in 1965. Its establishment in Ghana will represent, support, and protect the interest of the business community in Dubai. The Dubai Chambers in Accra is the second office to be opened by the Dubai Chamber of Commerce and Industry in Africa. Dubai says the move is a strategy to explore untapped markets.
The objective of our offices is really to support the business community from Dubai to enter new markets and to grow the markets that they are in. Our office will provide the information, the business opportunities, and we would hope that this will facilitate growing the business relationship between both sides. We're eager also to be able to attract more businesses to come and establish here to do business with Ghana.
According to the President and Chief Executive Officer of the Chamber, Ghana stands as a beacon of safe investments in the sub-Saharan Africa. It is anticipating that through the office in Ghana, Dubai can expand its target of 250 million consumers in the region. Currently, it provides services for at least 150,000 members.
We have almost 2.5 billion US dollar worth of trade already existing. Right now, 2 billion of the 2.5 is exports from Ghana to Dubai, and almost 0.5 from Dubai to Ghana.
The outfit will create a conducive atmosphere for small and medium-scale businesses.
All right, that's all in business, but shortly, Nana Fair comes through with the latest sports update. Do stay with us. We'll be back shortly. All right, so just before we go, the Ministry of Trade and Industry says government is inviting the private sector to build, operate and transfer infrastructural projects. The strategy is expected to cut back on the huge public debt, which currently stands at 44.9% of the gross domestic product. That's the GDP.
Many years of borrowing too much. We are now emphasizing private sector development using private equity. You hear companies saying, I'm happy to come and invest my own 1.5 billion to rehabilitate the Tama port. You don't have to go and borrow any money. You hear of companies that are willing to build toll roads. I mean, we've taken a lot of loans for a lot of roads in Ghana at their own cost and recover it over a number of years.
Ghana has heavily relied on the export of raw materials, including cocoa, gold, timber and other natural mineral resources.
The Ministry of Trade and Industry, through a multi-sectoral and stakeholder participatory approach, has developed a national export strategy and is also implementing a national export development program. The overall objective of the program is to develop the potential of the non-traditional export sector for the realization of a target of about 5 billion in foreign exchange earnings by the end of a 5-year period.
With the plummeting prices of oil and gold, Ghana has to re-strategize, paying extra attention to other neglected sectors such as manufacturing, which could boost its weak currency. Speakers agreed tougher decisions have to be taken for Ghana to emerge from the current economic situation. An economist, Kwame Pienim, though optimistic of Ghana's economic outlook for 2015, warned of tough times ahead.
The year 2014 marked Ghana's perhaps worst economic performance in terms of GDP growth. The annual growth rate of around less than 5%, and our performance in 2015 may be worse or under 4%, unless we make vigorous efforts that are being made to diversify exports, bring in importers, stabilize macroeconomic environment.
The European Union is calling for new partnerships.
Certainly around agro-processing, new products, adding the value here in Ghana to the products and then exporting them rather than exporting them raw outside and the added value being added outside. And investors will come and looking at that potential.
The Ghana Economic Outlook and Business Strategy Conference assembles key industry players for non-partisan analysis of Ghana's economy. The third edition, which focused on diversifying Ghana's exports, attracted investors and potential investors from more than 30 countries.